Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 18th of September 2019, so welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, some of the charts that we looked at this morning, just to see how everything's getting along. And of course, before we do that, as always, let's quickly have a read through our risk disclaimer. So, oh, and there we go. And the risk disclaimer has disappeared. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, but specifically our JFD research page, which you can check out on a daily basis, and I believe you can find a lot of useful stuff here. So yep, feel free to visit us on jfdbank.com. Right now, let's jump into the charts. Now, the first one I want to touch on here is Ethereum. And I talked about this one this morning, and I talked about this one yesterday. Basically, what I was talking about this morning was to keep a close eye on this 216.17 area here, which potentially could act as a good area for resistance. This is what happened. This is what we got. The crypto managed to overshoot it a little bit, but as you can see, neither of the 4-hour candles managed to close above this level. So in a way, this kind of increases the chances for a possible maybe correction a little bit lower here. So if it continues to struggle to push above the 216 or 17 zone, well, like I said, we will consider a possible slide here, maybe a possible move towards the 204 zone, maybe slightly above that, around there, around the 204 zone. We have the high of the 19th of August. So previously it was seen as a potential area of resistance. Now it could take the role of a possible support zone. So again, this idea we're still keeping in mind. I talked about this one this morning. So let's see if it can play out. But like I said, for now, the main thing for us is, like I said, is going to be this level here, the 216.17. If it holds again, then we could see this one traveling a little bit lower towards the 204 zone, and this is what we are probably expecting to see. Maybe if this previous area of resistance could act as a nice area of support. If this level 204 breaks, we see a slide further down. We could see a test of this tentative upside support line taken from the low of the 6th of September, and then we'll take it from there, because this is where it could also, the price could also meet its 200 EMA here on the 4-hour chart. So also just for additional support, this could play out nicely for the bulls. But again, like I said, for now, from the shorter term perspective, let's see if this can travel a little bit lower for a bit of correction, and then maybe rebound from the 204 zone. If it doesn't do that, if it decides to push straight away through the 216.17 area, then of course we will be targeting slightly higher levels. We do have a nice good area here near the 231 zone, which is marked by the high of the 7th of August, and then of course we'll take it from there, see what he wants to do after. But again, like I said, for now, this could be our secondary scenario. Our primary scenario here is maybe to see a bit of correction here before another leg of buying. Jumping into a few pairs now very quickly. NZDJPY, probably you don't look at this one very often, but could be quite relevant. Today we do have the New Zealand GDP figures coming out later on, or during the Asian morning. tomorrow. And yep, like for now, like I said, looking at this picture, you can see that the pair managed to climb higher from the beginning of September. It managed to move to the upside. It managed to push above its 200 EMA here on the 4-hour chart, but it kind of found good resistance near the 69.69 zone and reversed and drifted back below the 200 EMA here on the 4-hour chart. Of course, this could be seen as a bit of a negative sign. The expectation for the GDP figures is to come out slightly lower than the previous one. So let's see how that's going to play out. In a way, if it comes out the same as the forecast, the forecast is already below the previous. So in a way, probably we won't probably see, well, or I shouldn't say, there is a possibility that it may hang around here. Basically, maybe we'll have a small drop a little bit lower, but wouldn't be a quite significant one because the market is already expecting a slightly lower level. But if it comes out at better as expected, then better than the forecast, then yep, we could see a nice push higher here, maybe even a move back towards the 69.69 level here. So what you could do in a way from the technical side is to keep an eye on some of these potential breakout points. So basically on the downside, what we're going to be looking at is the 68.35 level. That a break below this would confirm a forthcoming lower low, and this could in a way open the path towards slightly lower areas, one of which could be seen here near the 67.93 zone, marked by the high of the 26th of August, or even if that doesn't hold it, then the next potential target could be around here near the high of the 29th of August, and that's around the 67.45 area, approximately around there. In terms of the upside here, of course, we're keeping a close eye on this 200 EMA and also this 68.80 zone. So a nice good push above this level would also place the pair back above the 200 EMA. This could be seen as a positive, and then yep, we could be targeting these recent highs, these current September highs near the 69.69 zone. If that fails to hold, then yep, this could be opening the path towards even higher levels. But again, for now, this is going to be the situation. We are going to be keeping a close eye on these two levels. Let's see how this is going to play out today, or should I say, depending on where you are during the Asian morning tomorrow. USDJPY also something to watch out for during the Asian morning tomorrow, but of course we do have the Bank of Japan setting out its policy and delivering its monetary statement. So that's going to be an interesting one to watch. But of course, the main focus that is going to be here will be on the FOMC statement, the Fed interest rate decision. So keep your eyes on this one today. That's today, guys. So let's see how this is going to play out. Of course, currently the expectation is that there will be a cut in the interest rate. Currently, the market is pricing, according to the CME's FedWatch tool, there is a 70% chance for a 25 basis point cut in the interest rate. So this, of course, for now, we'll see how this is going to react. Of course, normally we could see a bit of a slide here in the dollar if we see a cut, but again, let's not forget, maybe that's already priced in. So from the technical side here, guys, let's see how this is going to react, and let's keep an eye on some of these potential breakout points. So on the upside, as I've talked about this morning, also we are keeping a close eye on this little area of resistance in between the 108.26 and the 108.39. So in a way, a break above the 108.39 zone could in a way open the path towards the high of the 31st of July near the 109.32 zone. So could be a nice good target. In terms of the downside, yes, we will wait for a drop this upside support line taken from the low of the 25th of August. The only thing is that for us to get more excited with lower areas, ideally we would like to see a drop below the 107.50, because In a way, if this travels below this upside line, in a way it could get a hold up near here, near this 107.50, and then rebound back to the upside. And if it does that, then this would confirm a nice range here on USDJPY, and this is where could become a little bit tricky for both bulls and the bears. So that's why, guys, we need to see a drop below the 107.50 in order to consider further declines here. So for now, we're keeping close eye on these levels. Let's see how this is going to play out today. Don't try to predict the move. Unless you have a very good stop loss, but even then you could get wiped out due to kind of increased volatility and maybe some spikes here that we could see. So that's why, guys, first see the reaction and then probably act on this one. USDCHF, also something that's relevant. Looking at this picture here, forgetting the fact that there is a Fed decision today. We have a nice rising channel formation here on USDCHF. So currently, what we are aiming for here is we need to see a nice good pop above the 0.9975 zone, approximately around here, which is near the high of the 31st of July, and only then we will target higher levels. We will aim for the upper side of this potential, oh, I wouldn't even say a potential, but a nice rising channel. So we'll aim for the upper side of it. But again, like I said, we need to see that good break above the high of the 31st of July, which is around the 0.9975 level. So keep your eyes on this one. In terms of the downside here, in order to consider a possible move towards the lower side of this rising channel, a drop below the 0.9907 could do the trick here for the bears, and more of them could be joining in here and potentially pushing this one to the downside here. But again, the downside could be limited near this this lower side of the rising channel formation. So for now, keep your eyes on these two levels, and let's see how this is going to play out. GBP Aussie. GBP Aussie initially had